Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. This is Summit's exclusive show aimed at short-term traders. Garth will be running a real-time portfolio and he'll be showing us how to interpret market charts, where to place our trades and just how much risk to take, and he's with us in studio. Garth, the portfolio certainly got off to a very good start. Anglo Platinum was your pick last week. It was a short. You must have done quite nicely out of that.
Yeah, I'm very pleased. We got off to a great start. We shorted it at 707 Rand. If you have a look at the graph, you can see that we identified a lovely upward channel that the stock was trading in, and we put a short on two single stock futures up at 707 Rand.
Yeah.
Now when we go short, obviously we were expecting the share price to drop, and fortunately for us it did, and we were able to cover that short position at 620 Rand a couple of days later, which was a really great start for this particular challenge, and that yielded a nice profit of 16,000 Rand, which we'll be donating to charity towards the end of the year.
Welcome back, and in case you've just joined us, this is a Traders Corner omnibus event, and tonight, to wrap up our birthday celebration, we'll be doing a bit of a time travel review of the past 5 years. Still with us in studio, Garth McKenzie, founder and editor of the show. Garth, that was the first ever trade that you did, shorting Anglo American Platinum. I have to say, if only it were trading at about 700 Rand at the moment, because it's languishing in the 400s. What do you think, looking back at that?
Well, I mean, it's you know, that was 2009. I think both of us looked a little bit younger back then.
Speak for yourself. And at least one of us has had a haircut.
Yes, well, I've got a lot less hair to cut nowadays than I did back then. But yeah, interesting to see that. You know, I think leading on from that, if you have a look, that was 2009, and I've got a table of all of our performance for the year to date up on the screen at the moment. Well, for each of the years actually, and you can see that 2009 was the year we started. We only really had one quarter of trade in 2009, but that was a really great quarter for us.
Yeah, that was a cracker, actually.
We made 25% in that quarter, and then you can see the years that followed. 2010 was our worst year. We actually underperformed the all-share index that year. We only made 9% for that year. 2011, we did well to make 20%, whereas the market was flat for that year. And then 2012, 2013, and so far 2014 year to date have really been excellent years. And I guess there's a story here. You know, the 2012, 2013, 2014 have been proper bull market years, whereas 2010 and 2011 were very choppy, very sideways, you know, difficult years to trade.
No one at that point was sure whether or not the market would just fall on its head and head back to the levels of what, 2009, 2008, and get even worse.
That's when the whole double dip scenario was, you know, wildly being bandied about, and of course that never happened. I mean, we've seen markets racing on to all-time highs since then.
Well, markets have raced on to all-time highs. I'm not sure about economies, because it's but yeah, very interesting to see that in 2011, if you'd put your money in, say, Satrix, you'd have got virtually nothing back. Well, less than nothing, in fact.
Yeah, look, I think if you add on some dividends, you would have done a bit better than that. But I mean, effectively, the market was completely flat in 2011. So I think, yeah, we did okay to make 20% in that year. But I remember those years, 2010 and 2011, they were very difficult years. I struggled in those 2 years, but it's come a long way since then.
Yeah, well, maybe, you know, obviously we haven't ever been through a bear market, and that'll be interesting to see if this, you know, does turn at some point, how we'll do, because you have to adapt a very different set of trading strategies, and you're a natural bull, so it'll be quite a test, I suppose.
Absolutely right. I think that's going to still be the big test. You know, we've done well over 5 years, but to be fair, it's been 5 years of bull markets. When it comes around to a bear market, well, that's going to require a whole different skill set. But what I am relatively confident in is that, you know, the options structures and the options trades that we've been doing on this show now for the last probably year or two, those are bearish structures, and they haven't worked for us in a bull market, but bring us a bear market and those kind of structures will work very nicely for us. So I do feel that we've got some ammunition to tackle a bear market if and when we do see one. And I'm sure we will see one at some point. It's just a question of when.
God, so if you add all of that up in monetary terms, and of course, as this is a show that gives all the profits it makes to charity, how much have you actually generated for charity?
Yeah, well, up to now, up until today, we've generated trading profits of 471,000 Rand for charity. And remember that we start each year with 250,000 Rand of fresh capital, and then we donate the profits to charity and then reset it again at the beginning of the next year.
Fantastic.
So 471,000 Rand so far is what we've generated. Obviously, we're going to have our sights wildly set on that 500,000 Rand mark soon.
Oh, that's amazing, Garth, and it's been great, and it's been great to be able to do this every year, except in, I suppose, the one bad year, but we still had a little bit of money to give away, 16,000 Rand at the time. Garth, so I know, and this is a regular exercise that you do and that you suggest all traders do, is look back at your stats. This is sort of a special look back, but if you bring out some of, the key figures of the last 5 years, what would they be for you?
Yeah, well, here we go. So first of all, how many trades have we done, and how many of them were winners and how many of them were losers? So over 5 years since we started this show, we've done 121 trades over that time. 68 of them have been winners, so that's 56% winners. 51 of them have been losers, 42% of our trades, and 2 of them were break-even trades, which is sort of neither here nor there. So obviously, you can see the way we trade is slightly stacked in our favor. We've got a slight edge in that we've got more winners than losers, which is always a good thing. But then, of course, the key is to make sure that your winners are significantly bigger than what your losers are over time. That's how you make consistent profits as a trader.
Before we sort of explore that theme, 121 trades it's not actually that much, is it, over a 5-year period? And I mean, is that intentional, or was it just, you just trade what looks good to you? Don't rush out and just trade the market for the sake of trading.
Yeah, I'm a big believer in that you must wait for the high probability trading opportunities to trade. Don't just trade because you feel you need to be involved or because you feel like you're missing out. And that's what we do, and I think we've done quite successfully on this show. And that's why 121 trades over 5 years, it doesn't sound like very much. If you think about it, we probably record 48 or 49 episodes of this show every year. So you're talking about nearly 250 shows that we've recorded over the last 5 years. And so we've traded 121 times. That means more or less we've traded once every 2 weeks, which is quite, you could even argue maybe we're under trading slightly. But by and large, we've been patient to wait for the high probability opportunities, and the results do speak for themselves.
Yeah, they do, exactly. So it's nice to have a record here that you can come back with saying, well, it's actually worked for us.
Yeah.
If you break it down to the total winners, okay, well, let's look at the position size, or how much you made from the average winners and how much you lost from the losers.
Yeah, well, here it is. So the average winner, if we take all of our trades, all of those 68 winning trades, our total average return on capital for each of those was 3.27%, and then our losers were minus 1.55%. So that's given us a win-to-loss ratio of, our winners are effectively 2.1 times bigger than what our losers were. So that's a good system. You've got a situation where you've got 56% of your trades being winning trades, but you also know that on those 56% of the trades, you're going to make double on those what you lose on the losing trades, and that ultimately is a profitable trading system that we've got going.
I mean, that's a viable system, isn't it?
Yeah.
It's one that pretty much guarantees you making money. So nothing is guaranteed in the market, but if you know you're going to make winners more of the time than you'll make the losers, and there'll be bigger gains than losses, then
you've got a winning
then
system.
It works.
And the key here is that it comes back to the whole discipline thing, is that I would say that where we've actually been successful on this show is we've managed to keep the losers small, because that is where traders go wrong. They let their losers run away, and that's the problem. We haven't done that on this show. We've been very strict on stop losses. Where we've seen a loss, gone below our stop loss, we cut it and we walk away, no questions asked. We've never allowed a loss to run on this show ever since day one, and I think that is actually probably a large part of the key to the success of this show.
Is another aspect that you might have wanted that a little bit, the win-loss ratio is slightly higher, or that, because it's also, as you say, just as one tends to let the losers run, it's quite hard to let the winners run, and one is always inclined to take profits too quickly.
Yeah.
Is that something that, do you think, has been sort of maybe a consistent, not fault, but an element of what we've done over the last 5 years?
I think so, and I know that that's an issue in my own trading. Selling too soon, not allowing the profits to run enough, and but that, in my experience, is the hardest part of trading. is knowing when to sell, because you either sell too early or you wait and then you sell too late. It's very, very difficult to know exactly when the right time is to sell, and that, in my personal development, is still something I'm trying to master.
Well, I mean, look at the last couple of months' trade with PSG. As you say, we should have sold it right in the beginning when it was working out very, very well.
Yeah.
But and guys, just once again, average winners, average losers, 56% versus 42%. For you, is that good enough? I mean, it doesn't. Maybe on the surface of it sound that impressive, but is that a good stat?
Look, it is good, but I would like it to be better. My personal goal is to try and get 65% of my trades to be winners, and the rest only losers. So effectively 2 out of 3 trades must be winners. That's my personal goal. You can see that over a 5-year period we've missed the mark slightly in that respect. But I still think that's quite a decent stat. And if you actually read on professional traders worldwide, you'll find that that type of stat is probably quite normal amongst professional traders worldwide. It's difficult to go beyond 60% as winners if you're actively trading, I find.
Okay, well, let's talk about the 2 most memorable losses that you've had over the last 5 years.
Yeah, okay, well, the first one, this is one of our trades that we did in 2009, in the beginning of the show, right at the beginning. And what I'd identified here was that the stock had actually, I mean, it was looking quite good. It looked like it had formed a nice base here. You could almost argue that was like an inverted head and shoulders thing. And it had broken up and had come back to retest this support zone here. And I decided to go along and buy, for our portfolio, we bought at 55 Rand 20 with a stop loss at 52 Rand 91. And what happened very soon thereafter was that we got stopped out by the Dubai World dead standstill.
Remember that.
And remember that. That was when Dubai was falling apart. The property market was at a standstill, etc., etc. And obviously Murray and Roberts had a fairly big exposure there, and the share price took a fairly serious hit on the back of that. And I mean, that was a kind of event that we were not expecting at all. But we did stop the trade out. We lost a little bit of money, but not too serious. And what you can see is that had we just held on and hoped and prayed that this thing would come right, it never did. Even today, the share price is half of what it was back then. So the lesson was that, it was an unsuccessful trade. But in another respect, it actually was a successful trade because we had a strategy, we stuck to it, the loss that we incurred was not that significant, and we walked along and moved to the next trade.
Yeah. Well, let's move to the next loss-making trade, shall we? That's Sasol. Although I don't know what the price is there, but it's far above that now. So if you just held on, but what happened there?
Well, here we go. So I'd identified that Sasol was in a very nice, steady upward trend. The stock had consolidated into one of these beautiful triangle patterns, and these are normally consolidation or continuation patterns within a trend. They usually break in the direction of the trend, and they usually continue higher. And this one sold us a big fat dummy. It broke out. It did all the right things. I went along and I bought this share at 404 Rand. And if you gave me this chart 10 times over, I would trade it in exactly the same way all 10 times. But anyway, this time it didn't work out. And you can see it after breaking higher, it very quickly failed and it turned lower. And we were stopped out at our stop loss at 393 Rand. We took the loss. We walked away. What actually caused this big drop was that the oil price dropped about 30% in the space of 3 months, and that's what caused Sasol to fall so dramatically. But again, it's a situation where we were stopped out, we lost a small amount of money, but it would have been a hell of a lot worse had we not stuck to our disciplines here. So, I almost look back at that and think, well, you feel a bit like a champion for exiting at the right time rather than just holding on in hope that it would come right.
Yeah. What about then 2 memorable trades on the right side, where you were a champion, Garth?
Yeah, they were. Yeah. well, 2 stocks, Naspers and Aspen, are ones that stand out in my mind as being shares that we've made the most money out of on this show. So Naspers first. This was now back in 2012, and I mean, would you believe it? The share price then was 435 Rand. And we identified this sideways channel that the stock had been trading in. And what I looked for here was a reversal off the bottom of that channel for a rally back up to the top of the channel. And we got that. We took our profits at the top of the channel at 475 Rand. What then happened was the share price actually broke out, and then it consolidated for about a month into a bull flag pattern, and that allowed us then to get back in and carry on being long of the stock. And we traded in and out of Naspers a number of times over the years, and we've done quite well out of it. So this has certainly been a great stock for us.
How much did you make out of that, Garth?
I can't remember what the exact figure was, but it was one of those trades where we had a very good risk to reward ratio.
It was sort of the underpin. And what about Aspen?
And then Aspen, also now we're talking 2012, and this was back right in the beginning of this huge rally that we've seen over the last couple of years. The stock had broken out through some resistance, and it had pulled back and given us a nice retest of that, what was then support at 90 Rand. And we went along and we bought that pullback, and we rode that stock for quite a long time during 2012. And we've traded it again a number of times over the years, but you can see that is a beautiful trending stock.
Yeah.
And in fact, this trade was responsible for about a quarter of our total profit in 2012. So definitely a memorable winner.
90 Rand. You could almost argue just put just all the portfolio in that and just hang in.
You could, and in fact we probably would have done even better. But the point is, this is a trading show, and we're here to make active trades and be active. It's easy in hindsight to look back. We should have just, you're right, put it all in Aspen or Naspers and walked away.
And not had the show ready.
Yeah.
Well, Garth, we have to leave it there. The last thing for me to do, though, is this. That is happy birthday, Traders Corner. We'll be back next week, Tuesday.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.